I could see the dollar catching a bit of a bid, especially if you have a risk-off environment in the stock market, at least in the short term. If the dollar catches a bit of a bid to the upside, and then you can come up here and then fade the dollar for a more secular bear market in maybe I don't know, the next like 60 to 90 days. But if we have a dollar bid, we'll see if things go up a little bit higher. Oil, pretty strong support here around 61. I need my oil prices to stay above 50 in futures to make some money there. I've got to trade in with a 1111. Gold and silver. Gold, I just got filled on a trade today. It was a trade that I posted like 30 days ago. I ended up taking it off for like a $20 winner because I'm like, why am I calling the top? I did a call condor trade on gold futures, which was basically I give myself a profit trap. It was I get credit, I have a profit trap, and then I have risk. But the way I got filled on the trade was it was all the way up here where price just has to go like 20 to 30 points higher. Then I have my profit trap. Like, well, in the next, this was an expiration for 9:30, so next Tuesday. And if price just goes boop, then I risk $800. So I took the $20 profit and I just called it a day, and I'm not going to flirt with this thing. Meanwhile, I'm just setting in dollar cost averaging levels on GLD and gold futures. If we can get dips, I'm looking to go long on gold futures. Any dips would be great. Any dips. I'm happy to buy any of these dynamic support levels on gold. GLD, same thing. All of these support levels. Silver, all of these support levels. SLV, all of these support levels. I just put dollar cost average levels in on my margin accounts. I went $2,000, $2,000, $2,000, $2,000, $2,000. So I'm looking to allocate more. I have shares of SLV. I have shares of GLD. I'm looking to allocate. Okay, Bitcoin is pulling back and actually, underperforming. Bitcoin Bitcoin is underperforming gold and silver at this time. For now, I guess. MicroStrategy, I just think there's a lot of engineering going on here. There's a lot of volatility suppression on Bitcoin. The yield stuff that's happening where it's like there's ETFs and recovery call strategies. They're trying to put in a cap to the upside. They're trying to put in a floor in. I don't know. It's financial engineering. I'm not saying it's a bad thing. I'm just saying that it is not letting Bitcoin really trade kind of freely with risk on, risk off. I'm hoping that, as this cut cycle takes hold further and we got like a second and third cut for the year, that we start to see a weakening dollar once again and Bitcoin starts to get a rally. If we continue to see risk appetite, then Bitcoin can run and hopefully squeeze through some of these, covered calls and all the volatility suppression that it's experiencing. Ethereum, I'll wait for a pullback there. Coinbase, nothing. Copper, I looked at some trades on copper to get below these April lows. I just don't like the reward to risk. I think copper is still going to be